Okay, recap for Tuesday, the 2nd of June, 2026. Today was kind of an easy day, but there was a lot of stuff to weigh out first to get the bias. I was bullish, right? But doesn't mean that the market could not be bearish. Why? Because we have stacked relative equal lows on ES on the NQ, okay? But the structure itself tells the story. If I'm gonna be bearish, I would expect in this type of scenario some sort of like 2022 model. So after taking these highs here, we had to come and break this low, right? Typically we would break this low just slightly, right? Make relative equal lows or hit the rejection block, basically. And then that will set us for the stage once we go to discount to dump again, right? So how was the prediction if it did that? However, because we're engineering these lows, I just gotta keep in mind for a day. I'm not sure which day it is, but it might be the NFP, it might be whatever. But we're definitely stacking up lows. Yes, we're going high and stuff, but there is a question here to be: when is the next dump? Because they're clearly setting up for it, right? It doesn't have to be now. It doesn't have to be tomorrow. Whatever. But that's one thing to weigh out for. Anyway, in terms of our structure, if this is true and this is gonna hold, because the key takeaway was here, right? Once we make this low and then come later and just go just for a sweep to just make sure and then start the rally. If this was just normal, right, high or low, same with the ES, I would be more inclined to look for shorts or not be too confident about being long, right? So after weighing out a lot of stuff, checking the 4 hour, checking the daily. So let me show you what I'm looking at in the daily, right? In the 4 hour. So for the daily, once we came down, we basically in the suspension block, right? I mean this one. Here's this one. Yeah. So we came all the way to the low, right? I mean to the high of this volume imbalance. And if you're just looking at it in a suspension block, which is basically in the rally up. So all of that supported the idea that the market is still bullish. My one thing, right, and the only thing that I'm looking at is these two SIBIs, right? This mini one and this mini one. And I believe I have one highlighted right here. This is the one that I really cared about. If we're gonna stay bullish by 10, we can't close below it. So I know this is the one that ends at 10, this 4 hour. We can't close below it. Otherwise, I'm bearish. So I expect a fast morning, right? I expect the morning for this to be true. Once we come down to what we need to, then we're gonna have to rally up real quick before 10. So that's why I expected my entry to be early, and it's not gonna be on, like a 1050 macro or something like that. So just looking at the structure, and this is what we have. We have our Asia sell side. Right, what's this? It's not Asia sell side. This is written wrong. But this is Asia sell side, and this is the AM sell side, right? That's if we're gonna be bearish. I have to put them in case. We have discount of this range from this low to this high right there. So I'll have that marked as a discount, and I'm then looking for the liquidity after, because this day is gonna go higher and it's gonna go to the TP. It's just gonna previous daily high, which is Monday. It's gonna work out in discount liquidity in the PD array. See, I couldn't really find the PD array, but I was like, okay, I have our new weekly opening gap just in case. I'm not sure if that's done properly actually, because I didn't go to the one. Let me just double check that real quick. While we do. No, it's fine. I'm not sure if even this the new weekly opening gap is done properly. Wait, on the wrong chart. Just a quick check. Just a quick check. Yeah, it is done properly. Anyway, I couldn't find the PD array. Normally you can see it in the daily or the 4 hour, rarely on the 1 hour, but I couldn't find one that would be accurate, so I didn't really care. I was just like, okay, whenever it goes to discount, then the liquidity in this case is lunch low, right? As you can see right here, lunch low. So I have that marked out from all the way here. And once it goes to that, I know it's gonna hit the PD array, and it has to be very close to it. Like it has to be close. And if we're gonna wick and the body is at, if this body, for example, closed like this, yeah, then there would be no trade. I would go short after that. I would not expect us to come back. So anyway, we hit all the scenarios, and I'm like, okay, we open up, we dump, we create the relative equal highs. I'm looking at the initial liquidity, and that's all I'm looking for. I know, right? I know we're going up to the high. I don't care to be in it. I don't have the time really. I'm just in and out, right? Catch my what do you call it? 221. And because I've seen, right? Because once we get to this high, if they really wanted, if they really wanted to do it, they could drop it all the way lower. There is that potential risk. It's there, right? It is more likely to go higher, but the potential risk. I'm like I said, these days I'm trying to basically go to the 100% guaranteed trades where I know for sure if I enter here, there's no way, nothing is stopping it before going there unless like there's some BS news that comes out, right? So that's why I'm going for these trades. Let's explain the trade. Once we go to discount and then liquidity and then whatever PD array, you'll find it, it'll be there, but I can't be asked to just look for it, right? I'm not looking to get the most perfect entry because I know I have room to play with, right? So once we do that, I had my limit order on the rejection block, right? It would be nice if I got it, but it missed it by 3 points. Okay, it missed it by 3 points. So that's unlucky. That would have been the best entry, and then we're in there. But I didn't get my limit order, and then once we just started going up, I noticed the speed of it. So I was like, okay, this is what's gonna create the first presented fair value gap. And I just literally try market order as soon as possible, and it failed me somewhere here, right? So that's fine. That means I'll be near the low of the first presented fair value gap, and whenever it forms, I'll put the main position. So we have this like mini gap, but if you look at it with the what do you call it, the volume imbalance, this is the size of it. So when this candle comes in, I keep just buying and put my main position in. I'm mainly not looking at this. I'm mainly looking at the breaker, right? That's what I'm looking at, to be fair. The breaker. I wouldn't, to be fair, even if the first presenter didn't show here, I'd probably still enter on the breaker. I wouldn't really care, right? But it's the additional confluence. Right? So, and then after that, entry, no drawdown, and just straight to TP. Once that TP is hit, I'm done. I'm out. Then if you were like, I don't know, old me, old way of trading, my TP, my first TP would actually be here. Where is it? Right there. That's your first TP because you would know there would be a little pullback, right? Sometimes it depends. And as you can see, once we hit it, there is that little pullback, but I'm surprised that it was that fast. It's just done it in a wick. Is because we already had this one, right? Normally we would just run it up straight and then go here and then come back down. But after this, right, we need to do some sort of manipulation, get people out the longs and all that stuff. That's why I said I don't have the time. Like, watch this trade. This is 9:43 and we're done in 9:53. 10 minutes. I'm good. Done. I'm out of here. Because after that, yes, we're gonna get to the high, but we're gonna do some BS, right? And if I'm not careful, if I'm not watching it, or there's stuff that changes, right? Because stuff could change in the market where even if we're up here, we could still dump back lower, right? If stuff changes. So I'm not there to babysit it. So from here, right, once this TP is hit, watch how long it takes to get back up to the same place, right? Almost a whole hour and a bit. And then after that, of course, we're gonna hit the high. But this is essentially 100 points in 10 minutes. And if I'm looking at the next 100 points, then I'm looking at, is it 100 points? Yeah. The next 100 points, I'm looking at it in terms of, oh, what's that, 2 hours? An extra 2 hours for the, this is a 10-minute trade, and this is your 2-minute extra for the trade. Could I leave it and walk away? Yes, but am I comfortable to do that in these current climates where it's just doing, where any news could just come out in any second and they could just be like, yeah, you're done, cook you, and then go to the direction? No. So if I'm dealing with many accounts, I'd just rather just take the easy trade. But yeah, that's the market recap. You could decide to trade either way. I used to do this, right? The whole bull, right? I wouldn't even take profit here. I would genuinely just let it go all the way to where I think the TP is, especially knowing, because with this model, this model is trying to get basically the low of this day, low of this session, right? So it depends. So for this time, it is low of this session. I know once I get that, I could just leave the stop loss there and just let it go. But like I said, not yet, right? I might turn back into like a hybrid where I would just take some profit here and let the rest go. But for now, I'm gonna just stick to the guaranteed trades. Like I said, that I'm just targeting like what do you call it, 500 on multiple accounts, and that's it. If you need more than that, right? 500 multiple accounts. Basically, catch 3 of those a week, and you're talking about, I don't know, 5K a week. So it is what it is, right? I'd rather do that, be guaranteed. Anyway, that's the recap. Just one more thing, just because I didn't speak about our opening range gap today because we basically didn't have one, right? If we're looking at 930, we basically didn't have one. And mind you, if we have a 930 gap, right, and it's far, it's usually used as an inversion later. So if for example, somehow I was like, I don't know, I missed this for some reason, which is at this point I shouldn't, But let's say I wasn't locked in. This is always a good entry. This would always be a good entry, right? You just need to, I would probably limit it at that point. As you can see, it would hold throughout the day, regardless of the retracement. It's a good entry, but you have to make your exit kind of nimble, right? Because it can use it multiple times. Like as you can see here, if this wick wasn't longer, this run, the target of it would it be sweeping it, and I would guess 10 and 1028 is an SMT with ES if ES looked fine. Let me just double check that. And then after that, I need to just wrap the market recap because I need to do 10. Yeah, no, ES was gone at this point. Yeah, ES was gone. Probably why. This looks ugly. Let me just double check. That's the 10. Interesting. It didn't have an SMT there, but the wait was too long. Regardless, that's it. Don't worry stuff about too much stuff. Trust me. Go for the guaranteed easy trades, and leave this extra runs for your partials, and that's about it. Anyway, that's the market recap. What do I expect for tomorrow? I can't say that because that normally gives me a bad bias, and I'd rather just walk into the market and then make my bias at that time. So I'm not even gonna look and just leave it at that. So yeah, that's the market recap. Peace out.